I'll take the punks out, feeling funky. Amps in the trunk and I got more rhymes than this cops at a Dunkin' Donut shop. Sure enough, I got props from the kids on the hill with my mom and my pops. I came to get down, I came to get down. So get out your seat and jump around, jump around, jump around, jump around, jump up and get down. Jump, 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 everybody jump, 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 everybody jump, 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 jump. I'll serve your ass like John McEnroe.
Good afternoon. It is Saturday, July 19th, 2025. This is Mr. Not Advice. This is my weekend update. And as always, this is for entertainment and educational purposes only. As my name denotes, it's not advice. So, interesting week this week. A lot of exciting trading. I know the members and I did. Friday, of course, as Trump has been doing on Fridays or after the market closes, Trump said that he's going to seek a 15% tariff on EU imports. That only had the Dow Jones slide about 142 points. So not really a big deal. And the S&P ended up down about 0.01%. It did take out a new high over the on Friday. On the tariff side, we've got movement, but again, we don't have any solid deals coming out of the White House. I think that the market has largely, unless there is let's say, another country that just says, we're not going to deal with you, we're going to go to a tariff war with you. Unless that happens, I think that the market's not going to react unfavorably to further delays. Seems as though the market has grown, and I've said this before, thicker skin to some of, or a lot of, what Trump says. I think the market has gotten very used to that he's going to tweet approximately 123,000 times a day, and that he's liable to turn around like he did this week with the whole, I'm going to fire Jay Powell, no, I'm not. He's smart enough to float the trial balloons and then take them back in when market reacts unfavorably. So I think that as I look at the overall market, I have positioned myself, I've been going long for the last 2.5 months. And I've positioned myself at this point with the indexes breaking out the new highs and only the small caps lagging. I'm pretty heavy right now into my, in terms of market allocation and exposure. So we had additional data, hard data come in with the drop in, we had University of Michigan survey of consumers for July. Consumer sentiment rose 1.8% from June to 61.8. That came out exactly in line. Earnings, we had Netflix fall 5%. It said that its margins would be lower in the second half. We also had American Express fall, as well as shares of 3M fall. And they're all talking about outlook for the next season. However, looking at it's been an early start. Banks, financials report usually early, the big ones. Next week we have Megatech on deck, so that probably is going to decide the direction of the market for next week. Nvidia, it will not be too much later, but Nvidia this week being allowed to sell, I think it's the H200 chip, whatever, in China. That's why Nvidia now is leading once again. So far, we have 12% of the S&P 500 companies reporting, but only with about 83% of beaten estimates. So PepsiCo, United Airlines both popped. That was after JP Morgan and Goldman Sachs also popped. So weekly NASDAQ and the S&P, let's see, the S&P was up 0.6%, the NASDAQ was up 0.5%, and the Dow was marginally lower. Looking at one of the things I want to bring up. So Michael Hartnett is the Bank of America chief investment strategist. He's been pretty spot on calling macro signals in terms of where the market is and is the market getting ahead of itself. So he put out a private client letter note this Friday that said, as the market continues to melt up his trading signals or his sell signals that he follows had pretty much all triggered. These are three of his proprietary the bank's proprietary sell signals. They have a cash rule. So when cash as a percentage of assets under management are 3.9% or greater, that's a sell signal. Now, you go, oh my gosh, the world's falling. Well, let's look at what happens. The average S&P loss following the most recent 15 of these types of sell signals since 2011, 2%. Whoop-de-doo. Bank of America Global Breath Rule and 65% of the global equity index are trading where their 50 is great, is trading above their 50 over their 200-day moving average. So the ratio of their 50 over 200-day, it is down. It is now below their sell signal level. Their Bank of America Global Flow Trading Rule, the past 4 weeks, global equity, high yield bond inflows have been 0.9% of assets under management. That is down 1% last week alone. That is a sell signal. So 3 of their signals have triggered. However, even he says that those looking for the sell-off trigger shouldn't look to stocks, they should look to bonds. I love his statement. Okay. He says bears target bonds, bulls target stocks. Okay. So what is he looking for on the bond levels? You can write these down. These are absolutely super important. Okay. So what you're going to look for is the 30-year bond yields. The UK 30-year, 5.6% or higher. The US, 5.1% or higher. And Japan, 3.2%. Okay. So if we get those, that's probably where I will get quite a bit more conservative. So just something to keep in mind because, I've said to members repeatedly, look, one of these weeks we're going to get our face ripped off with the trades that we're doing, meaning we're going to get caught. Now, the great thing is we've been taking so much money out of the market that even if we get caught in 1 week, I mean, heck, the portfolio is up 40% for the year. Even if I, on a 10% position allocated, if I took 100% loss on that, I'd still be up 30% of the year. That's how I trade, being able to take base hits, doubles, some triples, a couple home runs we had this week, take that out of the market, profit, right? Lock it in, protect capital. That gives me the freedom later on in the market to maybe take on additional risk or stick with things maybe a little bit longer than I normally would. So looking at the S&P 500, okay, new high, but not a new closing high. Actually, it is a new closing high because we closed higher than Thursday. Also on the weekly, well, first of all, what I want to point out here is that high attempted a breakout. It failed. I don't think they're done. They're going to try again. Looking at the weekly, right? Here we go. We're stuck in this range now from the top side of this down to this. Till we break out of that, there is nothing to do if you're trading beyond 3 months. Looking at the overall or the NASDAQ market, the Qs. Here we are. On the NASDAQ market, again, new high, did not close there. We've had this before when it broke out of this level right here. New high didn't close, tested, boom. I think on a daily chart, this is very strong. Look at the weekly. We could get a retrace 50% on the weekly all the way down to 550, 557. Shoot, even lower. That's not a lot. 1%, big deal. Trend is up. Okay. Let's look at the small cap market. Russell 2000, we zoom out. Here's where we are in the small caps, not all-time high. I break through this, I'm getting long again on the small cap market via a 3X ETF. That's how I like to risk money when I have major indexes breaking out. Okay. Looking at some individual positions. Let's look at Ethereum. So we are in the Ethereum trade right now. All right. This is the Ethereum ETF. Okay. One of the things I want you to note here on Ethereum. So this is the price of Ethereum, but this is actually a ratio of the price of Ethereum to Bitcoin. Okay. So currently the ratio is not very large. Guess when it was a 1-to-1 ratio? When it was back on September of 2023. Check out the price of Bitcoin then. So how far do I think Bitcoin can move? Well, I think it can move a lot. And here is why. If I pull up, how far can the price of Ethereum move? I think a lot. I do think that Ethereum is going to take out its all-time high. Okay. Currently, the all-time high on Ethereum is 4,900. We're at 3,500. That would be that'd be a 45% move. Yeah, I do believe it can happen because when Ethereum takes off, when these things move, okay, and I was checking this out the other day. So I'm looking at cycle highs and cycle lows. So when I look at cycle lows from on a weekly basis, okay, and we hit this cycle low, 1345, to this cycle high, that's 4,400. Okay, that's obviously a 3x. So all I'm doing is I'm measuring the distance on each of these big bursts. Because if this is another big burst, which we won't know until we get above 4,000, 4,100, 4,200. But if this turns into another big burst, I want to be sure that, okay, if I 3x from here, that puts me right at 3,900. So maybe I'm going to be a little bit short here. However, if I take from here, 994 up to 4162, there's my more than 4x. So 1380 times 4 gives me what, 5200. That's how I break through. I think there is a tremendous amount of demand. Well, I don't think, I know, with the announcement of Trump's corporation buying 5 million, I think it was 5 million or 5 billion, whatever, of Ethereum. We've got Peter Thiel involved. Ethereum at this price level, I think for retail investors, as it opens up, as was announced this week, that 401ks, that he's really considering allowing 401ks to invest directly into digital assets. That's going to be a tremendous amount of pent up, irresponsible demand, meaning they're not going to be advised by anybody, just going to throw money into this. And then with the moving forward of all three of the digital coin bills passed, including banning or setting the framework, at least the stage, to ban a central bank digital currency. Look, the momentum's there. The political will is there on both sides of the aisle. I right now I'm only positioned 4%, but we've taken a lot of money out of Ethereum as it is. So I closed out this week starting at the 7. Let's see what our week started at 714. So 714. First of all, the cumulative return moved up from 369, call 373.87. So we're going to call it 18 points, 18% move. Overall portfolio for the year moved up an additional 6% from 34 to 40%. Cumulative return now is 387% over 25 months with an average day held of 14.36. Now, we really hit some big ones this week. PPTA, we got in, scaled in 3 days for plus 42%. I still own PPTA runners, and they are still up 107%. We own 714. We got stopped out of Mara for a 12% gain. We scaled PCT for 40% in 8 days. I still own PCT. I have runners in them, and they're up 64%. I scaled ARC for 38% in 7 days. UPRO, I got stopped out of for -9 in 7 days. Monster, I got stopped out of in -12 for 1 day. Took a Citibank trade, and that thing exploded in 1 day, 50% in a day. I still have the runners on Citi. I remain, excuse me, there we go, up 69% of my Citi runners. We own BBAI. We did scale finally on Friday, plus 59% on my scales in 1 day. I say finally, that's so funny. In 1 day, I still have runners. They're up 36%. SMTC, that's the one I finally got a scale on. SMTC, we scaled for plus 63% in 9 days. And let me see. I still have SMTC, a runner at plus 64%. I closed my final position in ARC. Scale was up here. Closed that Friday for plus 107% in 9 days. And then I rolled my MGNI. I had contracts that were August. I wanted to buy more time. So I rolled those and got 24% and then opened up a new MGNI trade. Looking at the charts of the stocks that I am currently in, I am currently in URA, which is a uranium ETF. So we got in, let me take a look here on the 17th, get to the day. Okay, so here we go. We got in on this break level right here. Okay, so I'm going to draw the line. This 39, 30-ish, 40-ish level, it broke the next day, the 17th we get in, it takes off. Now, I have not gotten a scale off. Some members did. Oh, I want to admit this. So I'm constantly talking to my members, and you hear me in the room saying, don't dick around for 2 pennies, right? Also, don't pick up pennies in front of a steamroller, okay? And don't be cheap. So what did I do? On Friday, I'd call out URA scale. Everyone can scale, right? So people are scaling at $1.45. I'm watching it, no problem. Everyone's getting them off. What do? Oh, I think I'm going to be a genius. I'll scale for $1.47 because we have this ongoing contest among my 60 members or so, where we try to get the best fill. Well, I thought I'd get the best fill of the day. Yep, $1.47. I dicked around for 2 pennies, did not get my scale. Now, instead of getting my scale off at 45%, I'm still stuck with a full position at only up 34%. So do not dick around, okay, for 2 pennies. Raising my stop on this up to 40.22, which is the low of that day. Let's take a look at Tesla. Tesla's trying to break this ridiculously dumb trend line that I drew for no reason, and now it's following it, so I don't get that. But I have no interest in Tesla until, as I've said repeatedly, if you're listening to me, till we get up here. Let's see what happens. TQQQ. I tried to open a trade on TQQQ, which is the NASDAQ triple Qs. The reason why I like to trade for options. So options are levered, right? 1 to 100. One option equals 100 shares. Then if I can get into an ETF that's a 3x, now we're talking the type of leverage and derivatives that would make even Solomon Brothers and Goldman Sachs blush. But when the trade goes in your favor, it really goes. So what did I have? Right. I had a break on Thursday. Okay, right here. Friday, I wanted to get in. What happened? I wasn't able to because price went below my entry level. So what is my new entry on the TQQQ going to be? Well, that's pretty easy. I'll take to the top of Friday's candle. Okay. And I have nothing to the downside at this point. SMTC. I am still in SMTC. What got me in right here? This break. Well, actually, that's not correct. I got in on 7.9. So right back here, 7.8. Here we go. All righty. 7.9. All right. So we got in on this break, came down back. Isn't it amazing how when price breaks, finally it will come back down and retest that break level? Okay. So obviously we've scaled on it. I'm still up 74%. I do not want to give that up. So I'm going to raise my stop to 51.67. Actually, with a 53.62 close, I'm actually going to raise my stop to 53.99. 52.99. Okay. That means if I break through that on Monday, I will look to close depending on what the candles, what type of pattern, what type of action was going on. Yeah. All right. So 52.99. Close enough for government work. There we are. All right. Let's see the Russell. I am waiting for this break. I get this break. I want to go in and yes. Roblox, those of you guys there in Roblox, keep raising your stop. Phenomenal. We should probably look to get in this too on Friday. Somebody wants to do a sheet on it. A break of Thursday's high. It's a nice candle to set a stop on. PPTA. We scaled on PPTA, entered it on the 11th. So let's take a look at the 11th. 7, 11, 8, 9, 10, 11. Oop, 11. There we are. Okay, so we entered it on the 11th. Got a breakout. We already scaled on this for, I forget, but I'm currently up 107% in it. 1692. I'll put it down here at 1641. Sure. Not going to let that keep falling if it happens. MGNI, I rolled. So what that means is I had August contracts. I wanted to buy more time. Okay. I like the stock. I I don't know, I'm hoping that we'll have some good news at earnings, but I like the stock. And with any luck, I've already taken 24% out. Because remember, I did that when I rolled it. Rolling just means I sell my August ones and I use that money, exact amount, and roll it in to September expiration. I add an extra 30 days. I had a 24% profit. So 24% of what I just bought is not at risk. Um, and let's see, ETHereum. I opened up a 4% position on Ethereum. Now, in addition to that, we have already scaled multiple times on our original Ethereum trade. We got into Ethereum on 7.9 right here. Okay. We got in right here and it's just taken off. And that happens sometimes. I think it's not done. I think any pullback will be a retrace of a breakout of this zone. So maybe down to the 30 level. My intention is to get up to 8 to 10% in Ethereum. I think this could be, I don't know. I hate to say how many X. Okay. But currently I've already removed 90% of my risk in the trade that I opened up on July 9th. And scales were all the way from 50% all the way up to 300%. My current open runner in my Ethereum contract from July 9th is up 293%. I also opened a Ethereum Leap January 2026, $39 calls. And I made that a 4 position. I opened them up at 4.9%, currently down 3.81%. I'm not worried. Okay. EOSE, wicked candle. Great news coming out of Friday. Look, let's put something in perspective here, people, right? We are now back above when the three kick to the nuts that we took, or kick to the ovaries that we took for you ladies out there, that drove it all the way down. The fact that this has recovered that quickly is absolutely astounding to me. Look, when you have a company that loses their CFO, it doesn't return. When you have a company that, think of the bad news as an offering, blah, 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 right? Here's where I am at with EOSE. Nothing has changed. In fact, things have gotten better. What did I see? I see Joe on the TV talking about, wait, you guys worked the last day of the last quarter to get extra cubes out the door. We talked about that. What else am I seeing? Additional felt deliveries. Then we had the big one. We had the tariff news this week that 95% of battery product materials and batteries from China are going to be banned, period. Okay. Then I watched Nick last week, Cerberus, and I thought he did a phenomenal presentation. And if you listen to that and you don't get all bowled up, I don't know what's wrong with you. Now, I'm not saying you should have a reason. That's up to you, but I currently do. I am currently, I put on a 4% position to add to my 9% exposure I already own. Okay. I own the January 2027 3.5 calls. I have 4% of those at 241, back up above 6%. I own the EOSE November 5 calls at 78%. That's only a 1%er. I just took a loss on my EOSE July 7 calls. That's a full 100% loss, but only 2% of my position or my account. I also own now EOSE. I own July 19th, $6 calls. It is a lotto earnings play. And then, of course, I own those leaps. So I have added, on Friday, I added significant risk to the overall portfolio while at the same time scaling out on a bunch of trades. When it comes to EOSE, yes, I think pulling up their earnings is bullish. I think they are, unless Nick is, and I don't know him well, and I've never heard him speak before, the Cerberus guy, but unless he just is so full of shit, I highly doubt that Cerberus would be making a presentation that close to earnings and being so positive. There was no moderation of, or attempt at moderation of outlook or of prospective growth. It was pretty much a sky's the limit. This is what's going on, and you better get in now presentation. So, and I didn't hear a lot of hype behind it. A lot of what I heard was factual and data based. So, I am bullish EOSE. And if I take a full hit on it, I mean, if I took 100% loss, it'd be 13% loss in my portfolio. I don't want to sound cavalier, but like, okay, it happens. It's not going to happen to me, but it could happen. And if it does, I have the inevitability of my other returns to depend upon. ENVX, great week this week. Very, very strong day. I put my stop up here at 1529. In fact, I've been trying to get in this dang thing and haven't been able to yet. So I thought Friday was a really great week. It started off really weak, strengthened up, and then closed green. Very good. Citi, we are still in Citi. We got into Citibank on the 16th. Right here is where we got in on this break. Okay, right here. This was our confirmation candle. There we go. Isn't that better? All right, so we took the break of this level right here, 88.83-ish. There was the break. We get in on this day, and the very first day we got our face ripped off, and it looked like we were going to get killed, and we were. Then the next day happened and it just took off. Here we are. We've already scaled. Remaining position in Citibank is up 69%. We'll continue to ride this. Looking at BBAI, don't like that candle, but what did I get? Not a 50% retrace, but I got a retrace. Let's zoom out. What do I have? Higher highs, higher lows, 5 candles in a row, right? Up here against the 873 break level, all-time high is 1036. Yeah, I think they're going to test it. Already have a scale done on BBAI. Still remain up 36% in the remaining position. Right? I've already sold my ARC. I'm watching entries on Bank of America as well as TLT. I've got additional capital put to the side for both EOSE and ETHereum. I think those are two. I mean, obviously EOSE, but I think ETHereum, certainly the ingredients are there for this thing to really take off. Whether or not it occurs, obviously things have to line up, so to speak, but I think they're lining up. I want to review something that I said, and I've said this before, and I think it's being misunderstood. So I've been talking about the current market and the current returns that that I'm achieving. And I made the comment, this won't last, right? And what I mean by that is this current environment won't last. That's making these returns easier. Okay. What current environment? Well, let me answer what I don't mean. What I don't mean is this won't last, that my methodology won't continue to work. Look, over the last 25 months, I have had publicly posted trades. You go to my website, you click the trades, and you just pull them up. And for those of you in Discord, okay, every day I post them at the close, sometimes earlier. So if you can set an alert, you could follow along some of these trades and watch how they work. But the current market environment is very unique. We are at all-time highs on S&P, on the Qs. We have the small caps moving now. We also have Ethereum moving, right? We also have what was expected to be the end of the world, economically speaking, with tariffs. That's not happening, so that's turning out slightly better than expected. Israel and Iran haven't bombed each other to oblivion, and neither have Russia or Ukraine. Additionally, China and the U.S. are still going at it, but somehow we got a rare earth mineral deal done. Okay, so things that were expected to be as bad as they're not turning out as bad as they were expected. Excuse me, better way of saying it. That type of environment where you got the market trading at the highs and where you have other asset classes like such as Ethereum, right, driving the market higher, or AI stocks, or quantum stocks. Back in the day, in the 90s, I had ISPs, or I had routers, or I had networking. I didn't have, a new asset class like Bitcoin coming in. So there is a tremendous amount of new, exciting product. And at the end of the day, that's what drives the industry, or product. Okay. That's all that tokenization is, by the way. Tokenization is just a step further. It's like a stock, sort of, but it has all the benefits of the Bitcoin structure behind it for security. So the current market is made it very easy because when stocks break out to the top side, they keep going because the overall market probably is doing the same thing. That is what I mean when I say this will not last. Not that the performance itself won't last. Even somebody like me, who's been trading for, let's call it 33 years, even somebody like me looks at the current market and understands that there's a lot of things in my favor in terms of my methodology. But I've traded in other markets too over these last 3 decades. I have to make minor modifications to my methodology, perhaps off the size down, like I did in the spring where I had less frequency of trades. But ultimately, I plan on and expect that I'll have at least one quarter where I experience outsized returns. Last year was in the fall. This year it's this. I don't know how long this one will last, but while it's lasting, I'm going to make money. So I do not mean that this will not last when I say that oh my gosh, my methodology is not going to work anymore. Over the last 25 months, the market has changed dynamics many times, and the methodology continues to work. The only thing that's going to break this methodology is me not following the rules. So my belief is I think the market, unless we get some crazy outlier event, I think the market's going to continue higher. It's a hated rally. I know that hedge funds primarily hedge funds remain underpositioned to the long side. Margin balances are not at extreme lows, not even close. Also, the long short ratio is not extended. While there is chatter, and it is true that the breadth of the advance is not deep at all. I mean, we got 7 stocks going up and 493 going down some days. That's typical on a breakout to new highs, where you get the leadership group and it drags everything up. But I think the big reason why I think Ethereum and the market is going to continue to go up, or at least that the wind's going to be at the market's back and Ethereum's back for the time being, is because of money. You've had over 45, 46, whatever the number is, global interest rate cuts. That is, backdoor quantitative easing. Okay? If you have to pay less on your interest costs, that's more money in your pocket. And companies have that. What do? They spend it, they invest it, they trade it, whatever. So that's backdoor quantitative easing. So I think because of that, and I've shown you that chart with Bitcoin tracking the M2 money supply, because of that, it is a purely supply demand function. So right now, the demand is much higher for the assets because of the dollars that are flooding into the system, both equities and stocks, equities, as well as Bitcoin and Ethereum now, is just going to overwhelm any selling. So I do think this will continue on. I don't know if it will continue on through the end of the year. I've got Ethereum taking out its all-time high. I mean, I'm talking 2 months. So we'll see. A little over 2 months. Actually, a little less than 2 months. As for EOSE, I've put a bunch on the line here. I just put 8% or 6% at risk on EOSE just on its earnings. So, and the thing with the earnings plays, ladies and gentlemen, you can be right and still lose money, right? Because you don't know what the reaction is. It's very hard. A company can beat, and maybe at that time what the market's looking for is, they beat, but their outlook wasn't good enough. Or it's something even more esoteric and ridiculous that their free cash flow grew by 0.1%. It's so retarded because it's all models. Think about it. It's all models, not real world stuff. Wrapping up this weekend update, I am positioned heavier than I've been in months, achieving great profits. It's been a lot of fun. But even during this, I still always have one foot on the sell button because I'm constantly protecting capital. And remember, protecting capital for me, you think about this. So let's say you have 100 shares of a stock and goes up 50%. So you hold it and it comes down 125. So you say, no big deal. came down 125. I'm still up 25 bucks. Then there's me. I had 100 shares, went up to 150. I sold half of it. So I have 75, right? I've taken off the table $75, right? Of which 50 is principal and 25 was capital gain. So on the remaining 75, I technically only have $50 at risk or $25 at risk, right? I got 25 on the gain already in there, plus the 25 on the other 75, right? So I've got a $75 position with $50 in capital gains. Whereas the person who wrote it down to 125, well, they only have 25 bucks and they don't have anything locked in. The name of the game is 2 steps forward, 1 step back. And too many people think it's 1 step or 43 steps back and then 1 giant step that will equate 400 trillion steps forward will happen. What a absolutely illogical, low probability, low profitability way to trade and invest. I'm sorry, it's stupid. You shouldn't. I don't believe you should do it. I don't do it. I didn't do that for my clients. So, no, it's not advice. But I'm going to tell you that experientially, unless we get a major black swan, this market wants to go higher. EOSE, looking at the strength in the stock, I mean, holy crap. Yeah, and they come out, the Chinese news, it's going to take time. As I said, as I look at all the soft and the hard data, the trend is in the right direction. The momentum, the news, all of it. I read the people on Twitter and they're so freaking impatient, but I get it. I understand that, but my gosh, give the company some time. This company Cerberus did not do what it did. It handed EOSE, 12 million in interest saving. There's a gift, 12, 15 million, whatever, right? They extended themselves by a year. I've been through all this. Now we get to find out if I'm going to be paid for my risk when they release earnings, if we get news announcements. Just because I lose money doesn't mean I was wrong. It means the risk, the reward, the probability didn't work out. I would do the same trade the next time too. So I am bullish on EOSE. I think ENVX could pop on news. That's why I'm trying to get long. I see things being lined up. That's different than before. Okay. And then I think Ethereum too. I think Ethereum is just getting started. We've seen these types of runs in digital coins before. And think about what's going on here. Effectively, the entire financial community, as well as regulators, have now opened the door to digital coins. Amazing. So I hope that if you're in the room, Discord, I hope you're asking questions. If you're not in the room, you're listening to this, why the hell are you not in the Discord? Okay. It's not something you got to come in, you got to post every 20 minutes. You come in, you check it once a day, see if there's anything of interest, pop in the NFX room, the EOS room, because I'm telling you now, there will come a point. I've already kicked out 1,200. We're going to go through another culling. I'm going to kick out another 100. That'll get us back down to 200 members. There will come a point in the next 6 to 9 months where I'm going to charge entry. Why? Because I got to protect who's coming in the room, because even free members, they make money. Seriously. So I want to protect it. So I'm going to charge. But my point is, for the people that are already in there, they're not going to get charged. At least that's my policy now. So, and I haven't charged anything. I want to build that up. And if you've been in the room and if you were able to make the free Wednesday trade entry session, you can see how we all work together as a team. We all have our responsibilities. We call them out. We have fun. We make money. We move on. So this community is continuing to grow. And so if you're listening to this and you haven't checked out the Discord community, please do. Please do. You will not be disappointed. If you're a degenerate, you will be. If you're a degenerate, maybe you can check it out and try something different for a change and make money. No guarantee, but probability is probably higher. So I hope you're all doing well. I cannot believe we are almost at the end of July. But thank you very much for listening. Have a super duper weekend.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping, just saying I'm different. Ain't hanging on to the coattails of the next man. Passport in my left hand, thinking that you are next. Heck, oh, you ain't holding your breath, man, cause I'm out here, I'm hungry. I don't play around, trust me. Ain't had as much drive since my Honda Civic got rusty, and my girl said that she loved me. It's funny, just think thinking back. Study hard for that 9 to 5 like I thought that should be done.